Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are taking a look at Union Pacific, ticker UNP. This stock might be above our buy range. It had dipped into it a few times recently, but headed back up to that fair value. I still think it's probably going to be a buy. I'm personally waiting for it to get below 200 and then I'm going to buy it up. But I don't think that it would hurt to buy it at its current prices. So we can take a look at the ranges and the numbers here. If we're looking strictly between the end of last year and the projections for this year, buy would be around 191, fair value would be around 215, and then sell would be around 238. And right now the stock's sitting at 202.5. It's really flirting with this buy zone, which is great for us. And it's in a sector that really hasn't gotten a whole lot of momentum recently. It's definitely a stock that I'm looking pretty deep into right now. But we can take a look at those numbers and see what's going on there. And also, I ran some historical numbers that are pretty interesting too. Here we have the numbers for the stock. We see that they've got decent growth, compounding just shy of 5%, but it's really picked up here recently in the last 2 years. And then we see that their earnings have grown 10%, picked up recently in the last 2 years. They are buying back shares, and that is picking up, which is very nice. They probably just have a set dollar amount that they're buying back with, and it's becoming a higher percentage every single year. Their free cash flow yield, 23% as of last year. They seem to hover in the mid-20s, 23 to 28, it seems. Their earnings yield has been growing since 2020. Right now, as of the end of last year, was at a high point, 5.4. That's a good number. ROE, 57.5. That's a very good number. So what do we look for in a stock to determine whether or not it's a buy? Share count is decreasing. Good. Free cash flow has been increasing. Good. ROE, not only has it been increasing, but it's well within the range. It's towards the upper end of the range that we look for. They pay a nice dividend, 2.5%. That's growing double digits. That's very good. Their expenses as a portion of their revenue, kind of fluctuating around that 60%. That's not exactly bad. Yeah, it kind of balances out. It took an uptick recently, but so have their other numbers. So it takes a little bit of investment to get improvement. For the Peter Lynch formula, we're getting a 1.12. So it's right about the fair value, slightly undervalued, which is what we were seeing on the chart. For Benjamin Graham, 5.4, 5.6. That's a good yield. 2.5%. That's good. I mean, everything is signaling a buy. So the question is, what price would we be wanting to buy this at? Here are the weightings that we're looking at. So earnings are the big driver here. And the dividend is the second biggest, followed by cash flows and then by the balance sheet. We see that as of the end of last year, the fair value was right about $201. With projections, it goes up to $205. And then continuing forward, 224, 244, if they can stay on the trends that they've been showing. So for our margin of safety, we'd be looking to buy this stock somewhere, strictly looking at this year, somewhere in the realm of the 170s. Going forward, which is really what the market likes to do, next year it's going to be 190, and then 2025, 208. Looks like the stock typically trades about just shy of a 23 PE. As of the end of last year, was at 18.5. right now, if they hit projections, it'd be at 17.92. So that's a very good PE. It shows that there's some upside potential. The market's really discounting these shares right now. Personally, what I'd be looking to buy this stock at, given all of the numbers that we see, I like a strong dividend. I like strong cash flows. Balance sheet isn't super necessary. We really want a positive tangible book value, and they do offer us that. We see small gains in the dividend, a little bit of a loss in the balance sheet, and that is because they might be buying back shares, but the tangible book value has been on a bit of a decline, a double-digit decline. So that is something to keep an eye on. The fact that it is pretty heavily positive means that it wouldn't be holding me back from the stock. If it were already negative, I would definitely say a no, but they're not quite there yet. And then earnings, I've actually got 20 PE here. So if I adjust this to 22, maybe 25, we'll see how that changes things. Yeah, 22 is still shy of what the market seems to appreciate. We're getting $231 going forward. But I also ran some other numbers. I wanted to see if you took a value investing strategy on this stock within the time range that we look at, where would you have bought, where would you have sold? So if we strictly look at the prior year valuations for the company, we would have been buying a whole lot in 2020, early 2020, and then we would have sold out in late 2020, and we would have turned 1.1K into 1.7K, $600 gain, 54.1% return. If we took the midpoint between the current year and the forward year, we would have the exact same thing. So the range didn't change enough, or the stock prices didn't change enough. But if we were to look at the forward midpoint, so looking forward in 2 years and buying every day that the market opens at or below the buy price, selling at or above the sell price at market open, and waiting at least a year with our shares. So this would give you the most tax-advantaged return. We would be looking at a whole lot of buys. I mean, you would have been buying similar to before, but you would have been buying all the way throughout 2020, almost every single day through the first half of the year. And then you would have started selling mid-2021. Selling 34 here, and then these are all different sells because that's getting you to 1 year with your shares where you get a more tax-advantaged rate. And with that, you would turn about $8,500 into $13,000, making $4,500 or 54% return. Again, 54.1 was the same that we saw beforehand. But then you would start buying back again in 2023. And this is where I'm seeing, I think that the stock is kind of undervalued here. So you would be buying up shares at the start of 2023 and continue up until very recently, 2 weeks ago, just about is when you would have stopped buying because it went above that $200 range. It's flirting with it again. So I've got my eye on it. If it dips below 200, I'm definitely buying some shares, but you would have invested another $12,000 into it. So you pulled out 13, you would have put 12 back. So you'd still have $1,000 in profit from the last trade to be waiting to buy up at least 10 more shares. So just something interesting I wanted to look at. And if you were to perfectly time the market and buy at the absolute low in this time frame and sell at the absolute high, you would have made $7,000 in profit, almost 120% return on your money. Now, I get that it was 2020 was great for everything. And of course, you buy anything in 2020, you make money. But we're buying it back up again in 2023. Very recently. On top of that, there's also dividends. So I don't have those factored in there. While I'm waiting for this stock to dip below 200, I'm hedging my bets too. You know, it might not happen, but I'd like to walk away with some money. So I'm selling a put credit spread. And that put credit spread is paying a decent premium. I will see if I can pull it up and let you guys know what I was able to collect on this one. Yeah, so I have a 197.5 strike. It's a 197.5, 195 put credit spread that paid me $42. So nothing massive, but if the shares do drop below or down underneath the $200 level, I've got some cash that I can throw in that's not even my own money, which is always nice. So this is the strategy that I'm using on this stock. Hopefully you guys understand it, and I'll keep looking for more stocks such as this where I'm definitely seeing some good potential, some good prices, and kind of bring a bit of a strategy to it. So thank you guys for watching. Please, if you want to see more videos like this, subscribe, like this video so that I know that you guys enjoyed it, you want to see more, and I will catch you next time.